Welcome traders, I'm Adam Harris from Trade with Precision and welcome to IC Markets Market Commentary. So I want to take you across the markets, different asset classes. There's quite a bit happening this week. I want to show you first of all, for example, when we look here at euro dollar, we can see it is sitting at a level of resistance and it is potentially trying to break through that, possibly heading up to the next level. So we're going to have to see how that plays out. Of course, the other thing is it's Monday. So Mondays can be funny days. They can do one thing and then reverse for the rest of the week. So one of those that I would say does require a bit of patience just to see what's happening. But what I definitely want to draw your attention to are the Swissy pairs. The Swissy pairs in general, in other words, dollar Swissy, pound Swissy, euro Swissy, CAD Swissy are worth a look. A lot of them have broken well above their 50-period moving averages, meaning that they are busy switching from a bearish sentiment to a more bullish sentiment, which means that principally for traders, they'll be looking for a retracement. They're a bit overextended now, looking for a pullback down to that 50-period moving average, and then looking for a continuation to the upside. And most of them are supported by very nice bullish momentum. So the Swissy pairs for me as a trader will absolutely be higher up on my list in the coming months. I'm going to say weeks and months as well. Dollar yen as well. At the time of recording, please note that we've had this very, very strong bearish engulfing candle. We know that the Bank of Japan have been twisting and adjusting their policies. They don't want dollar yen to go much beyond 150. And we can actually see as of the recording, this is literally probably less than an hour old, they've started to really push back on that. So what does it mean? Technically, the trends are to the upside, but we're hitting an area, a danger zone, where we know the Bank of Japan really doesn't want them to go much further. And you can see this isn't just dollar yen. We can see it on euro yen here as well. So what does this mean for traders? It means extra caution. It means that either don't trade. We always have these choices. Either don't trade the pair at all or reduce your risk. Make sure you've got your stop losses in place and be aware, be cognizant of the fact that this danger exists. Then if we're going to have a look at gold. So quite like this. Gold is a bit overextended. It has now produced a bearish candle. It is overextended on the weekly, and there is a very fair possibility, certainly if we break the low of last week's candle, that we could see a retracement down towards the moving averages or even towards the previous highs. So we could see that, certainly could see that as being the case. If we look at crude oil, we can see the crude oil is potentially forming a little bit of a head and shoulders here. We don't often use head and shoulders. We don't talk about head and shoulders patterns here at Trade with Precision because they really signify a change in trend. So we could see if we break the low here, we could see that there's going to be a deeper correction, simply speaking, for crude oil. Then if we're going to have a look at the global indices, so the global indices, this is where it gets a bit tricky. Even if you're a seasoned trader, we are in a bull market. So we are in a bull market, but even within a bull market, we do expect to have weekly retracements as well as monthly retracements. So we've actually had and enjoyed a well-deserved, much overdue weekly retracement. We pull back into the moving averages and we have produced a swing low. So the real question when we look, for example, at the Dow, the S&P 500, all of these on the weekly, we're going to be looking at the high of last week's candle. They've basically pulled back and are hinting at certainly the very first buyers to come back in might attempt to push higher this week. Okay, so that's certainly something, a very real possibility, especially if we look at the tech stocks here, that we might see a push higher to the upside here. And so that is something to be cautious of. If we're going to have a deeper correction, then potentially we'll see by the end of the week, we'll have a bearish engulfing candle and we'll just come back down to the next level. So as a trader from experience, I'm not too concerned. I know that we will continue back into the uptrend. The question I'm going to have here is whether this is the retracement on the weekly and it's happy, or whether we're going to have a slightly deeper correction. And either one of those are possibilities, and it's almost impossible to know which one. But I would say that certainly the market is going to attempt to move higher this week and to resume that move up. Also wanted to just quickly mention that the FTSE, this is part of the reason I'm also very optimistic about the markets. The FTSE in the UK, which historically has been a bit of a lagger, is now continuing on to produce and break all-time highs. So it's very, very happy. The DAX as well, German DAX, also very nice and bullish. Let's have a look at crypto. So cryptos are currently within a bull flag, meaning that if we start to break the highs here, it's starting to become more bullish, but it is in a downtrend testing support. So in other words, it is for bulls, for bull traders, it's not ready yet, and for bear traders, it's potentially looking to break through support. So it's basically a wait and see just a little bit longer to see what's going to happen there. Nvidia as well, we've had a really big run on Nvidia. We pull back, produced a bullish inside candle. Same thing again. I would say that we do have some risk, we have some serious resistance up ahead, but we could see the markets attempt to take another move higher before possibly having another correction later in the year. September's can be notoriously bearish, and so we might find that we have a bit of another leg up, and then we have a deeper correction between, let's just say, August and September and October, ahead of the US elections, ladies and gentlemen. Finally, Tesla, we can see Tesla moving down, this downtrend heading down towards 100. It's found a little bit of support in a surprisingly weak area, and so it's pushing up, but the downtrend is still intact, even though that's a very bullish candle. And finally, Apple, I wanted to draw your attention to this. I'm going to wrap this up here. Apple actually is sitting at a level of support, and I was wondering for myself at least whether this is usually this nice little bullish candle here is often that's often a very nice bullish double bottom within an uptrend, and certainly within a range. We fell just below that, and actually now we're pushing back in. So I'm very curious to see whether we ultimately finish with a very nice bullish candle. If we do this week back within the range, the probabilities that this is going to find support and continue up to the top of the range becomes much more realistic. There we go. I'm going to leave you with that. Have a fantastic week. Manage your risk appropriately, and I will see you in the next video. Thank you.